Well, greetings and salutations, Series 7 test takers. I'll also put this in the 65 and the 6 playlist as well. This is the Series 7 Guru coming to you from my studio in fabulous Las Vegas with another explication request. It's a Kaplan question. If you don't have a Kaplan QBank or Kaplan Quick Sheets, I highly recommend them. You're going to get 10% discount at checkout with my Guru 10 discount code. For that commercial, Kaplan allows me to give you a free look at Kaplan questions. We'll help you with any questions, just easier if it's Kaplan, because you can just send me the QID and I can bring it up backstage, so to speak. An investor redeems 200 shares of ABC fund. It has no redemption fee. If the quote is 1205, 1301. So these are the two numbers that we're interested in. And I think a good way to remember this kind of a question is that when a customer is looking at a quote, the customer always pays the high price, 1301, and always receives the low price, 1205. What's that called? The securities industry. No, I'm joking, but right, that's the spread. So here, remember, you're going to get cashed out at the net asset value. And so here the NAV is 1205. What amount would the investor receive? And so we're simply going to need to take the 200 shares here, and we're going to times it by the NAV of 1205. The NAV is to bid as public offering price is to ask. What I mean by that is, again, NAV and public offering price. The public offering price is the high price, like the asking price, and the NAV is like the bid price, right? So those are kind of synonymous terms. Anyways, we're going to take our 200 shares. We're going to times it by 1205. And that should give us the answer here. Let's put this in a different color. And let me get on my calculator. I'm arithmetically challenged, so I'm going to use my calculator. 200 shares times 1205. And the answer is $22,410 is what we would receive. Now, again, I think that what you might have been challenged with, the test taker who wrote this or sent this in, is probably the language. And so let me just put the language above this here. And so maybe we're struggling around with this quote. This is the NAV. And as I said, the NAV is similar to the bid. You know, NAV is to bid as public offering price is to, and you'd come up with the asking price, right? And here, this is the public offering price. And the public offering price, again, let's put that there. And so I think that probably was the challenge. I mean, it's not that challenging once you figure that out, but I would admit that perhaps that might be a struggle to know that, boom. And so maybe that's what you're struggling with. But now you know that if you are looking at mutual funds, an open-end mutual fund, that the public offering price is also sometimes referred as the asking price, 1301. And it's also a hint here that it's an open-end fund because of the word redeem, right? Because open-end funds, you remember, they're not trading in the secondary market. And we're going to be doing the business at the next calculation of the NAV, which is forward pricing. So maybe that was the struggle in terms of the 1205 and the 1301, and seeing this quote and not seeing the 1205 actually being referred to as the net asset value, and the 1301 being referred to the ask price rather than the public offering price. And I would agree with that. But, hopefully if you encounter this kind of a question again, you'll be more familiar with the language, and that's why you want to practice, drill, and rehearse. Remember, inch by inch, your Series 7, Series 6, Series 65 is a cinch, yard by yard. Your exam is hard, and I'll see you for the next explication request. Bye-bye.